Hey everyone, today is the 29th of September 2023, so this is going to be the final day for trading in the month of September, and I think there is a lot to talk about with what's been going on. So let's take a look at the dollar index first. We provide a midweek update on the dollar index. We were talking about how 106.5 is actually going to be holding off as a little bit of a resistance, waiting for a little bit of a potential correction happening with the US dollar. And I think we just got that. We had on Friday the dollar index falling below 106 level. Obviously we're looking at 105.50 as more as an intermediate support for the dollar index, but ultimately I think we need to see a little bit of a correction deeper. We anticipate a little bit of a correction towards 105 level on the dollar index itself. So right now the current progression is we're looking for a technical correction in the next few days for the dollar index here. I think this is currently going very well as it is. Now let's move on to the Aussie USD first before we talk about the other major currencies. Now this one here has been pretty good, right? It stays within that range. We anticipated 63.50 to kind of be a strong support level for the Aussie USD, and we basically just got that. We had a strong rebound from 63.50 yesterday on Thursday. Price is currently back up about 64.50, very close to 65. So in the near term, I think we're looking at a potential retest of 65 cents to 65.25. Intraday wise, on Friday, I think that could happen. It'll be interesting to see how the month closes for the Aussie USD. Is it going to close about 65 cents or is it actually going to close below that 65 cents level on the Aussie USD? But definitely something to watch out for as we start rolling in for October next week. Definitely want to watch out for any potential monthly close about 65 cents. If there is, then we might anticipate a little bit more of a pullback to the upside, potentially towards 66 cents. That could still be in play for Aussie USD. Now, EURUSD, this one slid a little bit lower than what we were anticipating. We were anticipating a little bit of a support coming in at 1.0550. We got the support at exactly 1.05, which is still good. The 1.05 is a strong psychological level, is obviously the key level to watch out for. A lot of people are focusing on that. It's just slightly lower than 1.0550. Now for this one, if we anticipate that correction to happen on the EURUSD, we anticipate a pullback towards 1.07. Obviously on Friday at time of recording, we still don't have the final flash CPI for the Eurozone, but we already have the numbers from Germany, France, and Spain. All of them are actually a little bit softer in terms of inflation, so we'll see how it is, how the market reacts. But for now, I think we anticipate a little bit of a stronger pullback for the EURUSD. I think there's a lot of buying momentum. You can see it on that 1.05 there on that close yesterday. It was a strong, nearly bullish engulfing. It's obviously considered to be a piercing candle on yesterday's close. So 1.0650, 1.07, that's going to be your key resistance to watch out for if you're trading on Friday, as well as coming in onto next week on Monday and Tuesday as well. But right now we anticipate a little bit of a pullback to happen on the EURUSD. The Pound USD also exhibits the same thing. Pound USD, let me just remind you, it is a very strong downtrend. On Monday's outlook, we did talk about the potential for, a move back towards 1.23 to test that as a resistance. And I think this is still in play. We just didn't expect the slide to be a lot deeper than what it is. We anticipate a little bit of a pullback first and then that push lower, but doesn't matter. At this point in time, we have moved closer to that 127.2%. Right now, we are going to be anticipating the Pound USD to pull back to 1.23, and we do expect a little bit of a selling coming in at around 1.23 to 1.2350 range. We anticipate this to be a very strong resistance level for the Pound USD. And if that happens to be the case, and there's a strong rejection coming off that green area that we highlighted here, then we anticipate a much deeper drop on the Pound USD. Obviously, 1.21 is going to be first, but looking at trajectories to the downside, we're not ruling out the potential to move back towards 1.18 level on the Pound USD if that rejection at 1.23 happens in the near term. Now, dollar Japanese yen, this is the one that everyone is talking about in the market. A lot of traders are actually afraid of that 150 level, and for a very good reason. this is a level where the Japanese Ministry of Finance is likely going to intervene. So this is what we call the red line currently in the market. We are still looking at that level as a very solid resistance. I think even if it spiked up above 150, it wouldn't be long-lived. It'll likely be very short-lived because a lot of position taking is going to happen around 150 level, and that would create a little bit of a rejection in the market as well. So for now, we still have 148.50 as a support, but ultimately we are eyeing that 150 level. I think the market is still going to take the Dow Japanese Yen higher towards the 150 level, but how far beyond 150, that's going to be the $1 million question, because obviously a lot of people are going to be afraid of that 150 level. So I think there's a lot of take profit targets at 150 level, and if there's a lot of profit taking that happens around 150, anticipate a sharp rejection from that 150 level. So this one here, as we're pretty much in that danger zone right now for the Dow Japanese Yen, upside move are likely going to be limited as well. So be very careful with the Dow Japanese Yen. It's going to create a lot of volatility. Now, let's move on to one assets that kind of missed the point on the dollar index correction here. The gold has been pressured lower, significantly lower. It actually bypassed a lot of the key levels in the market. We bypassed 1895, even bypassed 1885. Drop all the way down to about 1857 yesterday. Today's correction is very limited at this point in time, and right now we do anticipate a little bit of a pullback to happen, just like with all the other currencies, but we're not anticipating that pullback to happen to we're not anticipating that pullback to be so strong that it moved back to 1895 1900 level. We are currently anticipating a little bit of a pullback, maybe towards about 1885, which is the low in September, and we're likely going to test that low there as a potential resistance. If that's the case, then yes, there's going to be further selling that happen in gold here. We could potentially even see 1850 and even a dip below 1850 in the near term for gold. All right, so that's pretty much it for this week and this month of September. It's been a very interesting month, and in terms of the movement, price movement this week, I think everything is pretty much okay. We are currently looking at a market that's currently mainly driven by more of the technicals rather than the fundamentals, because in terms of fundamentals, we already have the guidance that we need to take into the month of October. So have a great weekend, and I'll see you soon.